how to choose the best S&P 500 ETF to invest for Singaporeans. Now, that's an interesting question because we always hear, right? You want to invest and then, you want to leap up. You just invest in S&P 500. But really, what's the best ETF that you can do that? Because there are so many ways to buy an ETF that tracks the index. And maybe if you manage to select one that really fits your profile and with a lower pricing, I think the returns will matter bigger in the long run. So today's video is an education piece. I'll share a bit about the S&P 500 and why people invest in it. And then I'll list some of these stickers that you can consider. But definitely don't take it as financial advice because I'm coming from educational standpoint. I'm just sharing what kind of ETFs are available out there in the market. And it's definitely not tailored advice to you. Because remember, I'm just a random guy on YouTube giving financial entertainment. And starting with the first point, what the S&P 500 really is. First of all, very simple to understand. You just take the 500 largest publicly listed companies in the US and you put them together in one basket. That means they are the biggest, they are the strongest, right? And then you can invest in them. That's the S&P 500. But in deeper sense, it is market cap weighted, which means that the larger companies will be a larger percentage, while the smaller companies will be a smaller percentage. Until the last few remaining losers may become quite dangerous because the other ones in the reserve list may take their place. So it's kind of self-cleansing, The better companies, the good companies will go and replace those at the 497 to 499 or 500 listed. But just to be very clear, even though it's a US index, it doesn't mean the company can only make money from US domestic market. Because a lot of these companies, they are multinational. So they are globalized already. Their revenue is actually spread out across the world, especially in Asia and Europe or even Greater Japan region. So even though it is US listed, you are also buying into global exposure because all these companies have global revenue markets. Now, historically, how has the S&P 500 performed? The market statistic is that it gains around 8 to 10% per year over long periods before inflation. And this is despite market crises like the dot-com bubble, the 2008 financial crisis, or even the recent COVID or 2022 recession. And before I continue, if you want to learn more about investing, then join us at over 22,000 members in the Honey Money SG Telegram group for free. Now, moving on to talk about the specific ETFs. So there are a list of ETFs that is going to track the S&P 500. Then you may think, why need so many? Is there some that are better ETFs than the others? Then obviously there is. And I'm going to help you make this comparison because there's going to be difference in the fees, the dividends withholding tax, the estate tax, and ultimately which broker you can buy these ETF tickers. Now, you see, these things may be very minute, very small to you, but over time, over the long term, all these small little costs actually compound over time and eats into your returns. So you are better off starting off right. Okay, you start off at the right foot. Then next time you don't need to change and switch all over the place. So let's start with our first group of ETF, which is US domiciled. And usually all these US domiciled S&P 500 ETFs, they distribute their dividends. They don't keep it for reinvestment or accumulation. So they're called distributing. And the most famous one is the ticker called SPY, SPY. But there are also others like the VOO, IVV or SPY-M. So for the expense ratio, I'll just put it out here. I don't need to explain. You just look at what is the smallest number that is to your liking, okay? The higher the number, that means the more fees that you have to pay. But ultimately, that is the most sticky one, SPY. People usually use that for options. But if you want to buy and hold for a US domiciled ETF that distributes dividends, then SPY-M with 0.02% expense ratio may look more favorable. And just to be clear, these are the easiest ways to invest in the S&P 500 ETF, but they may not be the cheapest way. Why? Because I will discuss later. But the fact is that if you are having an existing broker, okay, like all these discounted brokerages like Longbridge, Moomoo, Webull, Tiger, Usmart, all this that has US access, then most likely you are able to buy all these S&P 500 ETF listed here because they are US markets listed. And usually all these brokers, they require you to do buy trade, maybe in the US market, right? That's where you can use the S&P 500 to fulfill your order requirements, okay? Not for investing, but just to fulfill the buy order trade requirements. And if you have no trading platform at all, you ask me which one to choose. And as of the time of recording, I think the best one out here objectively, if we just look at the numbers, it's going to be Longbridge, right? Because they offer this interest boost coupon, plus they have the fun and trade welcome rewards where you can get some free shares of Apple and Nvidia. So you can actually stack all these rewards, and before you even start investing, you already start earning money as long as you fulfill the terms and conditions, okay? Make sure you read the terms and conditions first, but I'm not paid to shout out for them because this video is not sponsored at all, to be objective, okay? Later I'll share more. I think one very important fact is that if you invest in US domiciled stocks or ETF, you will be faced with this thing called US estate tax, which means that if you have more than $60,000 exposure, you can be subjected up to 40% in estate taxes when you die. Okay, you leave this earth, you will be subject to estate taxes. And this is why when we invest in US S&P 500 ETF, right, it may be a disadvantage compared to something called UCITS funds, which are listed outside of US, mainly in the London Stock Exchange and domiciled in Ireland. So these few are what we call Ireland-Domiciled UCITS ETF, which is your favorite tickers like CSPX, SPYL, VUAA. All these are UCITS funds that tracks the S&P 500 index. And just to be clear, this is not all exclusive because I've really excluded all those dividend distributing ETF. I focus on accumulation because I felt that it is better for accumulating to just reinvest your dividends, right? You don't need those money. Otherwise, you need to convert your USD to SGD and then you take out the money, then you suffer the foreign currency exchange spread. Yeah, no point. Just let it reinvest itself for the S&P 500 ETF and let it grow, right? Don't touch it. And from the list of these three UCITS ETF, you can clearly see which one has the lowest expense ratio. It's going to be SPYL. And this is objectively speaking from the fact sheet itself because the other two, they are at 0.07%, which may not be so ideal, but the difference is very small only. So if you're already on CSPX, I'm not asking you to sell all your CSPX and go to SPYL. Just do what you're comfortable with because I cannot give you financial advice. You just do what is best for yourself, all right? But I can share for myself that when I used to dollar cost average, I chose the SPYL because it has the lowest expense ratio of 0.03%. So that's my choice based on the numbers. Next point, we have to talk about tax drag because you have to realize S&P 500 actually have a dividend yield of around 1.3%. Okay, this 1.3%, if it's distributed to you and if it's a US domicile, it has to deduct 30% withholding tax. Okay, which means that for every $100, $30 will go to the US government, right? Then they will give you the remaining $70. But you will avoid this problem if you invest in the UCITS ETF because all these are domiciled outside of US, okay, domiciled in Ireland and listed in London Stock Exchange, which means the dividend withholding tax will be halved to 15%. So out of $100 dividends, 15% pay to US tax government, then the remaining 85% will not be paid out to you, will be reinvested back to the UCITS ETF. Yeah, so there is a tax savings element here, which I think is pretty good. But just to be very clear, you cannot just buy CSPX, VUA or SPYL in any other broker, right? Because not all brokers, they provide London Stock Exchange. So here are a few brokers that provide like FSM1, Saxo, but my favorite is Interactive Brokers because they are what I use for my long-term wealth building investment portfolio. And you can click on this link to support my channel. It will pay a small commission for every click I receive, or you can just scan this QR code here if you appreciate the content. Thank you very much to those who support. And let's move on because do you know that SGX, Singapore Stock Exchange, also has an S&P 500 ETF, and that is S27. S27 has the exact expense ratio as SPY with 0.0945%. And it's listed in USD. It's not SGD just because it's listed in Singapore Exchange. And the fact is that it still suffers US dividend withholding tax of 30% plus your estate tax if you hold over 60K. But why do some people choose S27 is because you can use your SRS to invest in S27. All right, but whether is that an effective counter to track S&P 500, there's another story which I will not discuss today. But just know that it is available in the Singapore Exchange and it's available for SRS investing. So sometimes when you invest and you choose a specific ticker, it's not always about cost optimization, but about the convenience, right? Some people really just prefer everything in one place. Yeah, no right or no wrong, just choose what is best for your own situation. So I would say that how do you decide what's the best S&P 500 ETF for yourself? If you just want simplicity, you want to just build on whatever you already have, like you're already using Longbridge, right? Then you go and search the S&P 500 ETF. Then you can just look at all the US domiciled ETFs that I talk about, the S&P 500, like the IVV, VOO, SPYM. But if you're more cost conscious, right, you want to look at the long term and you want to avoid all these funny taxes and reduce it, then I would say UCITS ETF is a more appropriate option, right? Objectively speaking, because you have lower dividend withholding tax, plus the fact that you can avoid the estate duties. Then if you just want local access, like you only have a broker for Singapore market, S27 will exist for that reason. But all these stickers that I mentioned is really only for cash investments. For CPF and SRS, there are of course different instruments that you can look at, but they may not be entirely the S&P 500. This one we'll discuss in a future video. So if you want to talk about it, then go and comment S&P 500 plus 1. Okay, S&P 500 plus 1. We talk about the CPF and SRS portion. So remember, there is only one S&P 500 index, but there are so many ETFs that is going to track the S&P 500. What is the one that is most suitable for you? I cannot advise you, but I can show you what is the difference. And after analyzing all these differences, you can then decide for yourself what is the best for you. Okay, that's why it's not financial advice. I just show you from educational standpoint. Okay, we are safe. So if you haven't clicked on the Interactive Brokers link, this is your last call to do so to support the content or scan the QR code here. And if you haven't watched my 1M portfolio review, then you can check out my previous video right here.